Morning traders, welcome to Traders Lab. I'm your host Tom B. Can I get a audio and screen check in YouTube and in the Trader Lab? Morning traders, welcome to the Traders Lab. I'm your host Tom B. Thanks for stopping by today. I stream Monday through Friday, 11:30 to 1 Eastern Standard Time, and these streams are available to 24 hours and also over the weekend for anyone who participates in the Bookmap Discord Trader Lab chat, as well as resources and additional information, screenshots of structured trades, and a library of webinars that you may review at your leisure. And some of them I suggest you have some very strong coffee because they're up to 4 hours long of real-time narration. Today's an interesting day, and I think what I always find about trading is every day is an interesting day. So today is no different than other days. It is interesting, provides, of course, opportunity and risk. And we're going to look at today what we anticipated, how the market manifested itself, and structured trades that are available so you can. And the goal of the Trader Labs, you understand, it's a community of like-minded traders looking to leverage their collective experience. In other words, share screenshots, trades, structured trades, uh, mixing different methodology that might be appropriate, and explaining and educating. It's a collective experience. I'm not a vendor. There's no trading course, and this is available to everyone to reverse engineer. And the idea, so you guys understand when you visit the stream, or even if you're in the Trader Lab or just stopping by YouTube to say hi, is there's a that trading is a business. It is not a video game. It is about probabilities and understanding where edges or probabilistic trade opportunities and, of course, risk will show up. And the other aspect of this is it's random in the sense of the outcome of any specific interaction with the participants in the market. Now, in order to try to decipher these behaviors, this stream focuses on market mechanics. In other words, how does the market work? And as opposed to a basic indicator approach. Uh, the thing about understanding market mechanics is it is the purpose of the market to discover what it's worth. And it's no different than shopping. So if we take an approach of why do we have a market? It's to figure out what's too high, what's too low, and what's retail. The other piece to this is how does it do it? Can we recognize it? And the part that's most confusing, by the way, for all of us, is the transitions from directional to rotational configurations. And how do you decipher, do you want to be trading one side? Do you want to trade both sides? Can you only trade one side and then when it changes, it becomes rotational? Do you then take, for example, today, let's assume longs perhaps? And then do you only trade long? Or subject to your skill set and a vetted trade plan, do you trade long and short? And do the probabilities in this condition not favor taking the shorts, but it does take favor taking the longs? If you can't tell the difference, then you're really, in my opinion, at a disadvantage. So what this stream is about is to help you differentiate your outcome from most retail traders. Most retail traders come into this business thinking it's an indicator business. The way I see it and my experience is based on 43 years, and I still learn something every day. Uh, my experience was that indicators create a conflict and no, because of having multiple indicators and time frames, which is kind of what we tend to do. However, if it's not consistent, there's no way to measure it. The problem with that approach is indicators by themselves without a market understanding, which is what most retail traders do with a very poor outcome as far as a career in trading. I think we need to learn not only from what we've done, but from what others who have gone before us have done. And then is it realistic to expect a different outcome if we're doing the same things that they have done? Just a thought, something you might want to think about. I think we might want to go back to this. Hold on. Got to take care of some business here. And again, everybody's mileage may vary. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. In other words, you have to find what fits you. You need to find your alignment. This is day trading. It is not scalping. What it is attempting to get in alignment with what the market offers. We don't control that. We do control what we do and when we do it. So it's a matter of understanding your control. This operates like casinos operate. It's gaming. Casinos play games that have a statistical edge. That's the only games they play. But the cards coming out of the deck are random, and the way the gamblers play the cards are random. That's gaming. Well, we're also gaming. And we want to be the house, I think, versus be the gambler. Most retail traders, the vast majority, are gamblers. I think it's better to sit on the other side of the table. And there's a process to do that. Now, obviously, in a casino, they play the games exactly the same way so they can extract their edge. For us, since we're emotional beings, even if we have an edge, we need to be able to play it exactly the same way. And the emotions are as much a problem as not having a vetted trade plan. You put those two pieces together, and I believe, in a personal opinion, it's a recipe for disaster. Now, I want to, by the way, this is a note for everyone. Starting Monday, I will be quoting the December contract. That's ESZ3, if that's the symbol. We are currently in September, and we're doing what's called rollover. If you're not familiar with that, if you're in the Trader Lab or wherever you are, make sure you understand what that is, how it impacts the market, how it may affect certain technical tools that you use like Delta and other elements. So so you know, Monday I will be using the December and all the levels from there. Now, um, let's talk about today a little bit. Well, we know what happened yesterday. Okay, yesterday, if you were on the stream, you saw that we had shorts uh, early. Actually, I think it was short, long, short, and then we had a change in behavior. Literally, we had what was called a failed auction at the low of the day. In other words, we took out the first hour low by a couple of ticks, and then we had a huge move, a reversal move to the other side. And as I mentioned to you guys, uh, that changed everything. And then it was the long side. Okay, so you got to turn the boat around. And I was a little slow to turn the boat around, as I mentioned to you guys. And that happens. Uh, Always try to get better. And sometimes we all can get myopic. But the thing about trading is you can recognize at some point if something doesn't work and you have structure and you see that you're not getting the depth of rotation, it can kind of give you a hint. So I took the hint and I got aligned. But that's neither here nor there. So let's get into the day because there's a lot to talk about today. Now, I posted in the Trader Lab today based on the RTH Open. Now, I want to point something out. I haven't been doing this too much, but I wanted to do it. Let me just see. Yeah, here it is. Let me try to get, hold on. This is the ETH, right? Okay. Yeah, we're still in ETH over here, right before the RTH open at 8:30 my time. I want to show you this just so you get a little sense. Now, there were trades in the ETH, longs, as a matter of fact, a couple shorts, a couple longs, but I want to show you a level. And auction market theory is based on shopping. This is a distribution. Let me just show it to you. 'Cause you're gonna see why it might be relevant. Maybe if I can grab this thing over here. I just want you to see what this looks like. I'm gonna scrunch it down a little bit. Now this is the ETH, okay? Now what this is, so you know what this is high volume. And remember shoppers, when you go to store, shopping is simple. You pay retail. Well, that's high volume, isn't it? You buy and sell a lot of tuna at $1 a can, there's going to be a lot of volume there. If they put it on sale, you would think there'd be more volume, but the fact of the matter is there's less volume on sale. Why? Because the demand, if you think tuna's worth $1 and it's 75 cents, what's going to happen? The buyers show up and then the sellers raise the price. I mean, and for whatever reason, it goes down there. Maybe they want to move inventory, whatever. We don't know, right? But it rotates down there. And who controls the price? It's not the buyers, it's the sellers. So if they raise the price and you think this is the fair price, they start raising it. You're still, oh, it's 90 cents a can. Hey, that's still a deal because it's $1. Then the sellers can raise it higher and you're still going to get buyers, but the volume, as you notice, goes down as the price is being raised until we run out of the buyers. They say, you know what? It's $1.50 up here. I'm going to shop someplace else. And either the sellers lower it back to retail to get you to interact again, or you go, I'm never shopping here. I can buy can of tuna down at the other store down the street, the supermarket, and they're at 75 cents a can. Let's just say 50 cents a can, new price of tuna. Nobody shops up here. They all start shopping down here. Anyway, that's the point. Now, here's the important part of this. In the ETH, we fell out of this price. It was too high. We fell out of this price. It was too high. And as we were auctioning, buyers and sellers, retail, it was too high. You notice how we fall out. Same thing here, and we come down here. And all of these are auctions. And think in fractals. So this is the whole ETH, and inside of it are these auctions. And what the purpose of the market is to try to figure out what is this thing worth? Well, up here is the lowest volume in the whole ETH session. It's right about there. And I labeled this. It's called the low volume node. I want you to remember that. Now, let's move on. And it's kind of important because what's the last auction or the last information we have as far as what the participants think our tuna might be worth, or ES if you're not shopping for tuna? It was too high here, right in here. So that's the separator. So this is the overnight volume point of control. Volume point of control is another word for retail. This is yesterday's retail price. So yesterday in the RTH, this was the highest volume. So we are opening basically at the retail price in ETH, which is the same as the retail price yesterday. So, and there's a little bit more. The overnight mid. So retail, mid, okay? So right in here, and yesterday's settlement right up here. So right in here is a fair price, retail. And when we open like this, we can anticipate a couple of things. One is it's going to auction back and forth. And that's what I was anticipated, and I posted this in the Trader Lab. But also, there's another piece. If one side grabs the ball, then you can get a directional move. And initially and I always suggest in the Trader Lab that if you don't have a specific plan for the open, that you wait, because there's going to be potentially underlined a lot of opportunity to participate with structured trades that are available in the Bookmap Discord Trader Lab. However, the open, because of the speed, the volatility was what I really mean, and it's a separate trade plan. At least that's how I see it. Now you can do whatever you want. There's no monopoly on the right thing to do. But if you can't measure it and you don't have an edge, just like in the casinos, you're the gambler. So If you can't recognize or participate in this, your job's not to participate. Now, this is the RTH open. Let's go take a look. Now, I'm looking at this naturally, and this is what I know. I'm opening here, RTH open. This is retail, and I consider this balance. I know this is my outside edge from the ETH. Now you're going to see how the pieces come together. By the way, if you have questions in the Discord Trader Lab chat, please post them, and also try to keep the chat clear just during the stream because things scroll off. I can't see them. And also, if you're in YouTube, there's a delay. So post in there and I'll do my best. However, I cannot watch the chats and stream at the same time. So I have to kind of, you know, um, pause. So just so you guys understand, thanks for your patience. So this is called the develop. So right here, I'm looking for this. This is what I anticipate. And why? Because of the location of what's retail. Remember retail. What's too high? What's too low? Retail. And this is too high in the ETH. Now you know the lay of the land. So I'm looking for this, this. Well, what do I see? Buyers out of the, bang, and they're off. Here they come spinning out of the turn. It's ES in the lead, right? Okay. Globex. So this was my separator. Everything above was too high. So let's watch. I come up here. Surprise to me. Anybody ever get surprised? This is the value area high from yesterday. Now I'm going to give you a couple statistics just to kind of think about. So what we did is we opened in range in value. One second. Just give me a second, guys. I lose some of these levels. I just want to make sure I've got them right. Okay. So we open basically, I would almost say it's not lower in range, it's basically the open was right on top of yesterday's close and settlement. So pick one, it's like, do you feel lucky? So here's some stats. Taking out the first hour high, which is called the IB, is a 67% probability, more or less. The previous value area high, hold on a second. 16%, low probabilities. It's either lower outs. Wait, no, I gave you the wrong ones. I'm sorry, guys. I got tons of statistics here. Um, Overnight volume point of control, 83% probability we're going to get this. That's not a breach, is it? The naked volume point of control, which is the point of control from yesterday, 70% probability. The first hour high, 69% probability. The previous value area high, 59%. The overnight high, 49%. The previous high, 40%. Now, here's what's important about this. Those are only statistics, but we have levels to aim for. So let's go back to this. And past performance not indicative of future results. You got to vet everything. Who knows, right? So this is our developing VWAP in mid. This is our developing volume point of control. And the way to look at this is retail, because the volume determines what's a fair price. Now, the thing is, if this is too low, you might not be able to buy it there. Now, we don't know. This is aggressive buying. Now, right here, it's like, what's going on? Pull back to mid. Now, in the Trader Lab, there is no trade here in a structured trade. If you have a plan where you can trade this, then of course that's it. But I only share structured trades. And occasionally I'm going to walk the line a little bit and share trades that are kind of a little on the edge, if you know what I mean, but they're pretty structured. This is called Vpoc migration. This is suggesting, let's read the language. Remember, the Trader Lab is about interpreting market mechanics and behavior without indicators, because if you can understand behavior, you might be able to deploy indicators. that can be in alignment with the perceived behavior. It's about understanding the language of the market versus a line that crosses over that's looking back and measuring price or some derivative. So that's the difference, really. So, and you might be able to use those tools better if you actually know what's going on here. This is a structured trade. That is saying this is a new retail price. You notice how the market ran away. Well, what it's saying is too low, and now we pause. Now there's more volume right here than there was down there, and we ran. So all these are little consolidations, but we're running higher, higher, consolidation, break high. These are supports in microstructure. And you've seen me do this if you follow the stream. And if you haven't seen me do it, there's that library of webinars you can watch. So this is the first structured trade in the Trader Lab. It's called Vpoc migration. And here's how it would work. Right here is too low. This is microstructure. Think of Russian dolls. It's the easiest way to think about it. This is called trading in fractals. And what it is, this volume in here, this little thing, or this little one, is the same as the big one, Russian doll. So this is too low, which we don't know. There's our buyer. Now, we don't know if it's going to come back here, fall up, right? Who knows, right? I don't know. Wish I did. This is too high. There's my seller. Here's my test. This suggests the potential to go lower. It's not a short, it's a what's going on question. When I take it out, this now, if this was resistance, becomes support. Just follow the yellow brick road with me. Here's my buyer. That's pretty good buying. That's pretty good buying. The sellers took a shot here. Not so much. There's another piece I'm going to share with you too, as long as we're at it. Now, this is the mid, okay, which is neither here nor there. Right here, I'm going, what's going on? So I pull back. This is the stop and iceberg detector. I just want you to see quickly some tools. Only 4 sell stops come out. Here, only 2. Where's my sellers? And right here, this was my seller. You see the test? Here's my seller. I only got 4 stops and 2. That's only the weak hands getting taken out. Who do you think that is? Retail traders. Now, watch. Order flow. Now, this is still not actionable for me. It is is this really what I think it is? Question. Order flow is like a hand pushing from underneath. On the other side, watch. They are pulling. That's lifting the lid. Okay, just something you could think about, not a recommendation. Here's your microstructure. There's the volume. Break high, too low. Support, microstructure. I'm just reading it. I'm not giving you anything more than interesting, right? Volume, break high, too low. Volume, this is support, right? Break high. Now you have Vpoc migration. Let me explain. This is called fractals. So if this is too low in microstructure, as we're moving along, the developing volume point and control. Now think about this like this is a supermarket price. This is your convenience store. But they're selling out at this price. You can't buy it here anymore at the moment, and this can change. There's the buyers. Notice the stops are coming off, 85 going up. Watch. Now here there's 5. A little exhaustive. What do you get? Counter rotation. What was too low? There. As long as I'm above there. And what comes in here? Liquidity. Pressure. Now, first structured trade. If you weren't able to get on any of this, this is your first trade in the Trader Lab. Here's your microstructure. Same thing as over here. Watch. Here's your buyer. Underneath that comes the next level of fractal up. This is your buyer in the supermarket. So buyer in the convenience store. I always think of it like shopping because what's the ES worth? Remember, we're trying to figure out what's too high, what's too low. Well, at the moment, this is certainly too low. And as we went up, this was too low, this is too low. This is, what's going on? Oh, it's too low. Supermarket migration, long, Trader Lab structured trade. Okay. Now, watch. Yesterday's high. What is yesterday's high? Let me try to find the statistic. Um, by the time I find it, it's not a high probability, but the context is telling me there's aggressive buying. It's about 40%, but it's a target. Once I'm coming up like this, I am looking at targets. What's over a previous high? Stops. Full session VWAP. This is a target. If you got long here, at least for me, and you have to vet this for yourself, what is on the extremes? Stops. What do I want to trade into? Retail trader behavior. Write this down. Think like a retail trader. Don't act like one. If we get, do you think there might be stops at yesterday's high? Do you think that's a place to scale? And now, Vpoc migration. Let's start labeling these things. This is called, come on, what's going on here? Okay. A variable high volume node. That's what I call them. I made a name up. I don't know what to call them. And remember this, I'm over this layer too. This was resistance. So I cleared my resistance from the ETH, right? That's why I went over it with you. Variable high volume node. Now, the other thing that's very subtle in this, and I want to show you this. Right here, this is a long, this migrates up. Watch this behavior. If this is too low, and you can see the buyer, here's my volume. I test, I break out above it. Now my volume is here. I'm higher, and what do I test? Here. Is this too low? It migrates up, suggesting there's more volume, price and volume moving together. This is the idea of auction. What's a fair price? And you know how auctions work. You ever go to one? Shifts higher, too low, long. So long, Trader Lab structured trades. Long, stops here, scale, helmet. Now, let's watch. Does this look familiar? Guys, is that a yes? Is that a no? Is that maybe? What do you think? This is not an issue. Let me show you what it is. This is retail. Remember, and there's a reason I go over these things at the beginning of the stream. Oh, it's $1 tuna. Let's put it on sale. 75 cents a can. Outside edge. Oh, it's a sale. Let's bring it back to retail. This is a context inside a context. It is called mean reversion. Mean reversion. If you understand mean reversion and we come outside and you have structure, which you may or may not, it is a long back to here or not. Remember, the stream here is structured trades, market mechanics. In a trade plan, here's the thing about a trade plan, guys. I can show you or share with you things I have worked out over many years. But here's where the trade plan comes in. First of all, this here is too low, right? Buyer. If I rotate outside and look where the low volume node is, same as what I showed you in the ETH, except this was resistance. Coming back here, this outside edge is now support, right? I can come back here. If this was 4 points instead of the range it is, the behavior is generic. This is what I want you to understand. If my trade plan does not support this, I cannot take this trade, okay? But the behavior is generic. The behavior of the market doesn't care about our risk reward or our plan or what qualifies, because the first job in trading, in my opinion at least, is get risk neutral. protect your account, be around for the next trade and thousands of others that may come after that if you're in the business. One trade, if you're FOMOing in and you're thinking dollars and it's going to the moon, Alice, that's a prescription for disaster. So I'm going to recommend maybe you don't do that. But this here, once we test outside and we come up, we pull back, we come up making new highs, we pull back, we get Vpoc migration. Does this look familiar? It's a long or an ad or nothing. Watch, watch. So the way I think about this, I'm just giving you an idea, and I'll check your questions if you have them. This was too high. There's my seller. I come up here. This is too high. Remember what I was showing you coming up? Too low, right? This was a little too high. There's your outside rotation. There's too low. There's your buyer. There's your pullback. Here's your pullback, to this volume right here. So it's all in alignment. There is too high. There's my seller. See the seller? So what is this? Isn't this the same thing from the other side? This is resistance. Now, nobody knows. I'd love to tell you, oh, get out here. No, but here's what I know. Watch. If this was too high in my convenience store, the little store, they won't pay it. Where might they shop next? Back here, right? In the supermarket. Think of it in fractals. So this is a higher time frame, some more volume. This was too low in the supermarket. I check it right here. Too low. Here's my volume here, and here's my resistance. Now watch the behavior. Watch. Here's what happens. If you get long here, this was too high, right? This is the scale for this long. Then, if we can't get above this volume, we can rotate and who knows, right? Fall out, do whatever it's going to do. I mean, that's, the lovely world of trading. By the way, I have to mark this. Hold on 1 second. I'm going to, yeah, let me put that there so we know. Because how does the market tend to work? It checks prices and all fractals and timeframes. I mark these on the way up because we can come check them up if we come down. And I don't know. So since I don't know what's going to happen, all I can do is try to stay in alignment. So too high, long, scale. You see the behavior there? Scale. Now, I have to clear this. This is my volume point of control right here at yesterday's high. Looking good, Lewis, right? And I will check questions a little bit. I want to get through the sequence of longs here. Okay, let's see where other targets might be. Overnight high is a statistic. 4470 is a statistic. These are targets, and there's one more, I think, 7475. Yeah, I posted this in the Trader Lab. It was like, I think around 7475. And there's another one here, 8250. None of these are recommendations, but they're all posted in the Trader Lab. So we all know that maybe we might get there. So here, right? So this is, remember, long resistance, helmet. Notice what happens here. Clueless, too low, Vpoc migration. Watch. So what am I going to do? You know what I'm going to do. I'm going to label it. Why? Price and volume are moving together. So as long as that's happening, I'm a happy camper. I do have some targets. This one, right? And you guys know, and if you're new to the Trader Lab and past performance not indicative of future results, there's over a 90% probability we're going to take out either the overnight high or low. I'm inclined to say it's going to be the high, considering we're getting price and volume moving together. So let's look. So if you were long from any of these longs that, I've been narrating here, and there's going to be more, you'll see them. We're going for this. Okay, in other words, a sequence of targeting. So here, this full session VWAP is a viable target. This is a target. That's a target. That's a target. And then 75 and then, helmet. So let's watch. So this Vpoc migration. Now let's look at a change in behavior. So this, remember, too high. Scale, risk neutral. This moves up. Looking good, Lewis. What happens though? Too high, too high, seller, seller, too high. See it? Now I don't know what it's going to do. Clairvoyance is. I'm waiting for. I sent in my coupons and it hasn't come back yet. This now becomes too high. So what happens? Now I'm going to show you something that's almost magic. It's just the auction though. And remember, I don't use any indicators. This is the VWAP, and this is now too high. Watch. So when the behavior changes, it is suggesting the potential to take stops, come back here, and VWAP, and maybe mid. Now, nobody knows. Now, let's come back and look at this. Here's an outside edge. Remember, mean reversion. And it can be as mean as it needs to be. We don't know, remember, we don't know how far outside is. That's the mean part of mean reversion. But what do I know? What do I know? I know this is too high in the short term. I know I broke below this price in the supermarket. It's too expensive. And I know this was too low in the supermarket. And I know if I look at my swings, where's the stops? Under here and under here. You always got to look left. If you're a retail trader, where are you trailing your stops? Here, here, right? You guys know that, right? You know how I know it? That's where I used to put my stop. How about you? Well, think like a retail trader. Just don't act like one. Right here, now this is something that in the Trader Lab you might not get involved in. This is a structure right here. The trade in the Trader Lab in an uptrend might be to come out either here or here, come back to here, come back to here, and then go here, here, and up. So let's watch. And again, it's subject to your plan, who knows, right? This is a long for me. Now you're going to say, well, yeah, but what about this? Yeah, what about that? What's the trend? Where's my statistics? Where this is left over from the last time we were up here, and it was a retail price. The market tends to check retail in all fractals and time frames. That's retail. Well, if this was retail last time we traded up here, and possibly it was too high, is it reasonable to come back, the shoppers come back to check it? Also, in the ETH, we basically, this is the ETH high, came back and checked it. So we checked it in the ETH, but I have this stat that's over 90% probability, and you have to vet these for yourself, that we get here. And if I get there, I can get there. And if I get through there, I can go to the 80s somewhere. It's up here someplace. Yeah, there, 82. Not a recommendation. Do you see how you put the pieces together? Now, the thing about the auction, they're levels. They're not walls. They're nothing more than maybes. And in trading, and write this down if you haven't thought about it, the best you got is maybe. So this is a long. This is the scale. It was too high. I'm trading in fractals. So you have to scale ahead of this, and then you're going for this. So let's see how it works. Vpoc migration. Huh. I guess that's too low. Let's watch. Where do we come? Where's the stops? Under here. Where do we come? Out here. This is outside edge again. What is it called? Mean reversion. Here's why we call it mean. Where's the stops? Right under here. Right here. Outside edge. Now this is a buying trigger. Watch it. Look, we know the stops are over here. 90 34 stops come out. Buy icebergs. Important. The, so you understand who uses stops mostly. It's us. And are we smart? No, we are retail traders with a astronomical failure rate. And why is that? Because most of us are all doing the same thing. Well, if we can reverse engineer based on your experience and mine as we developed in our journey, hopefully to become a career trader, we need to understand and journal and understand the behaviors in the market. If the market participants all have their stops piled up and you run out of buyers and we rotate, isn't it reasonable to think the market will go in that area? And then if they get into the stops, there you see the delta. Those are these guys coming out. The other part of it is, as we approach this level, the order book, they're pulling the liquidity. When there's no liquidity in the book, it's going to rip through because they're looking, the sell stops. There's nothing, there's no buyers. Basically, they're pulling away from it. But then when the stops are going off, the icebergs are buying into these stops. They're absorbing. And now look at the book, how the order flow comes back in. This is how heat map can really help you in Bookmap because you can see this. I'm at an outside edge. This is called mean reversion. And what it is, oh, the tuna is on sale. Here's the retail price. Now, the fun part of trading is we have no idea. So you can't know. All you can do is anticipate to participate. If you got taken out, by the way, on a trailing stop or whatever, this is another long. And where you got to scale? Here, because it's called mean reversion, outside in. Then you're back on the gravy train, hopefully for gravy and not a punch in the nose. What are you going to do? Let's come back. Where was it too high? Let's come back and do the same process. Here, it was too high. Remember? This is where the selling came in. What I do, and I'm going to use the term very specifically, attempt to do, is look at where it was too high. Just like you guys do, except I look at it a little differently. I look at it based on volume. So if I know here, like here, let's look here, too low, buyer, buyer, too low. Here's volume, and you want it to go pink, and it goes, you're out, right? Well, if the sellers were activated here, I know that I might get sellers again, right? So if I get long here, I got a scale here. This is the mean. That's why it's called mean reversion. And also it's mean. And then this was too high. So I need to be thinking about that. So it'd be here. And depending, now it depends on how many you're running, This I know is the next obstacle. If I get my scale here, I could just be trailing or it could be wherever. This is subject to trade plan, you know. So far, watch, looking pretty good. I got my volume here. So there, rejected. Okay, I'm still above here. This is all okay. Here's my volume. My volume here is equal to my volume here. And now I have no clue. I'm going, come on. You ever root for your horse? Never been, I don't think I've ever been to a horse race. And here's the high volume. You could see it here. So what we want to see happen here, here's the volume. You want it to go big. Come on. And here's the volume. Come on. And what do you get? The opposite. Seller. Okay. Now what? If we can't get back, so here's your seller. Here was your support. This is the volume point of control. What we want to see is a test and continuation. Where do we come? Watch the structure. This is the seller. This is our resistance, right? Last place where we had a price and it was rejected. To go north, I have to clear this. So if you're in this, Subject to how you, and it's all up to you. If you're holding, you'd be going, like me, please, right? Do you ever start asking for a break? Clear this. When you see this here, for me, hasta la vista. We'll see you on the next one. Thanks for playing. You have a couple indications here. This seller, it needs to, right? Because here was support. Breaks below, comes back. It can't get above here. It needs to get back above here. Can't get above there. That's resistance. There's your seller. You're still hoping. Where does it pull back? Here. Too high. Right there. There's your seller. Do you need any more convincing that maybe it's time to hit the eject button? Certainly up to you and your plan. Are you guys tracking? And what is this? By the way, it's the mid. Huh. What might we do at the mid? I don't know for sure about you, but for me, and what's this down here? Oh, you're saying, what a coincidence. I know you're saying that. You know what? That's how I used to. When I was first figuring this out, and I got a lot of heat from other traders who told me it was crazy. Because I don't forget, I learned market profile in 1985, and it was Peter Stottlemyre, the guy who created it. Um, so this was too low, remember? Well, if I come back to an area that's too low, remember, shoppers? Now, I don't know, by the way, why didn't it stop here? Why didn't it stop there? When I figure that one out, I'll let you know, because I have no idea. Watch the behavior here. We fall below here. Now, this is another reason to make you nutty, and I just want you to just have an open mind. Wasn't this support that from there? Watch. Wasn't it support? Doesn't support become resistance? I break below support. I pull back here. What does it do? Too high. Back inside the range. Now, I'm not suggesting to you it's a short. I'm going to suggest to you it's something to contemplate. What do we have here? Volume, seller. Watch. Now I'm thinking I still got a high probability target up above. Remember the overnight high. I'm above the ETH low volume node. You didn't forget. I know you didn't. And I'm testing what was too low previously. When this broke below here, I was testing what was too low previously here, but it became too high. That's why that and the VWAP. So there to there, not a recommendation. It's not a Trader Lab structured trade. I'm just giving you something to chew on. Here's a consolidation. This is microstructure, and I'm at a location, right? And who knows, right? I don't know. I wish I knew. I don't know. So there's my micro volume. There's my buyer. It's the mid. It's the VHVN. Now let's watch. And now we'll look at your questions. This is a long. Where do you have to scale? VWAP. Why? VWAP sellers, retail trader behavior. They're mechanical. They don't understand what this means. And again, who knows, right? You know. And what was this? Too high. Look at the behavior here. Reaction. Now, for me, I know that if there's shorts in here, this is where the stops are going to be. I also know, based on retail behavior, remember, think like a retail trader, but don't act like one, that we'll see potentially selling. So I want to scale ahead of this, and then either it's going to fail, right? The seller's going to be right, and I'll scratch the trade, or I'm using trade management, which is under these little structures, here. See the buyer, the test, support, microstructures. Stop under here. Worst that happens, I get a happy meal. Then back here. These guys become fuel for the up move. There's their stops coming out. Thanks for playing. Your broker sends you the gift basket. You ever gotten one of those from your broker? If not, you probably ought to get a different broker. And then we have our stat target. And by the way, what's this? I know you've seen this before. I'm going to pause now, okay? Because I think you see what's going on. Is everybody tracking? And then there's, as they say, there's more. We have more targets above, but I'll stop right at the overnight high. Questions? And I apologize for taking so long. I think, Raman, you asked me about, I think I'm showing you in Bookmap how I use it. And it's a combination of pieces. Um, if you come to Trader Lab, and if I have time, I'll show this to you. There's a priority, or for me, a hierarchy of inputs. I call this the chassis. So the behavior of price and volume, which is based on really what the market's all about, is it's an auction really because they're trying to figure out what is it worth. That's why we get rotations, and it's a price discovery process. Now nobody knows what it's going to do because where's too high, where's too low, where's the high of the day, where's the low of the day. Well, we won't know that until we have hindsight. So in the meantime, it's can we detect um, the price discovery or auction process. That's what this is all about. Then it's order flow using tools like Bookmap to see inside. So I can see microstructure. So what I can do with Bookmap is I can get inside. So I call Bookmap the tip of the spear. This is where I execute, and this is where I can open it up and see this. I can't see this with standard software. Now, I've been trading this process for a long, long time. I think uh, 2007 or something, where I really was doing this. But I didn't have Bookmap. I didn't get Bookmap to 2015. So I was doing this process with but in higher time frame structures. So I had less granularity. I didn't have any of this, and I could never read the dome. When I started trading in 1980, we didn't not only didn't have a dome, uh, we didn't have computers, we didn't have an internet, and that's another conversation for another time, you know. So, but anyway, so it's a priority of inputs. So when I get inside into more minutia, this is what I'm looking at because I can read here, and then this shows me the order flow right here. So I'm seeing uh, what's happening in the book. I can never see that. And then when domes first came out, which I might have been 2000, I can't remember. I don't remember any of this stuff. Uh, I tried to read the dome. I couldn't. All these numbers clicking around. I couldn't do this and trade. I just and handle it. And that's why I got an order flow tool. When Bookmap first became available, I looked at that, Bookmap and a couple others that were out at the time. And to me, Bookmap was just levels ahead. And I did my due diligence and I felt I was making the best decision I could based on what I knew at the time. And it turns out in hindsight, it's just like a trade. It was a good one. Um, because if you follow what Bookmap does, they're continually innovating and introducing new products, new add-ons, I should say, new tools, and it's all included in the Global Plus package, with a couple exceptions like the Stop an Iceberg detector and some of the other tools, but primarily everything's included in it. Uh, so they're pulling, they're pulling. They're pushing. This is order flow. Anyway, I'm just wanting to say, so now north, next target. Okay. I hope I answered your question. Um, Plenty of people in there, but see the word balance gets thrown a lot. It might not be fitting. Makes sense you provide your description of what you define as balance. Um, Balian, the thing of balance is it's fractal in the sense of what is balance. The thing about I'm getting a question in the Trader Lab, what's balance? Now, balance is a term for consolidation or two-sided trade or rotation. And for example, this is balance right here. And the Vpoc is retail. So balance is what's too low, what's too high, and rotational trading. That's balance. So it changes from directional to rotational. And that is its own context inside a context. So if and we don't know, so if the market's going up, the bullet train, right, which we can assume today the trend might be up. On an intermittent basis, the market is going to exhaust, and then the longs that are in the market or new sellers are going to take profit, the longs, and then you'll get some shorts. I mean, people do sell these rotations. And we can come down to the other side or outside edge. Where's too low? And this is where it changes to what's called mean reversion. So the mean, if we think the trend might be up, and let's assume, and we have this statistic, don't forget, right? High probability. If we roll to the outside edge, oh, it's on sale. My tuna is 75 cents. Let's buy it because retail's $1 over here in the tuna S&P market. 75 cents on sale. Oh, take the stops out. Thanks for playing. That's life in the fast lane. Test yesterday's high. Lovely. Outside edge, back to retail, and now where's too high? Statistic. That's balance. Now, here's the other piece about this. It's fractal. Where's too low? Where's too high? Outside edge was out here. Retail is here. Too high was up here. You can see it there. What do? We come back here and check retail. And what happens? The buyers, so this is balance from here to here. We pull back here, it's too low. Now we don't know that. That could have been too high, and we could come all the way back. We could just stay here. So that's balance. What happens here is we come back, and this is a potential long if it's in your plan right here. There's the volume. And what was too high? This, right? So if you got long, you got to scale either here or here. No, this is all the same structure, this. So let's look at the microstructure. This is balance in micro. Chop, chop. Too expensive? Seller. Come back and check the price in the micro. I'm not paying that. I'm leaving. That's your convenience store. 8 o'clock, Saturday night, Ben and Jerry's, get that pint of ice cream, and they charge you a horrendous amount of money, or you need the can of tuna and for your movie. Good luck with that. And we come back to retail. We come back and check retail, and in the supermarket, this price is too low. But we don't know that. It could come out here. It doesn't. I get my buyer. Now my resistance is here. I got to scale. Now it's either going to fail, which, they do, or since I have this target, remember, bang, and I have this target. These are all targets. So when I'm trading, I'm not only operating in this to try to get location based on the current behavior, I'm also trading in multiple time frames. This is the daily time frame, and then in a higher time frame, there's more. So that's that fractal. I hope that answers your question about balance. And the thing is, trading's like a slippery banana peel because you don't know how, you don't know if, and you don't know when. Guys, write that down. None of us know any of these things. So how can you be responsible for knowing something that you can't know? How can the casinos be responsible for the cards that come out of the deck or how the gamblers play the cards? They can't. All they can do at the casino is play the game exactly the same way so they can extract their edge over a large sample size of random interactions. This is how we measure ourselves. Let's look right here. Okay, now these are targets, right? Okay, now remember our upside target, I think was 75 or something like close. I don't remember. It's in the Trader Lab. For some reason, there was 75. I can't remember why. And then another one. You got to watch 80, and this is another target up here. So here and here. That's because this is resting liquidity, and they've added. You got 300 here. There's not much sitting around here. So this is the outside edge of a low volume zone that was left behind from the day we broke down, which I think is Wednesday. So all of these are targets. But, if it never gets above here, that's okay. Anyway, this, we're only at 9 a.m. I want to move along because but you know what it is? The reason I take this time to go into the minutia, this is a way to stay in alignment as close as you can. The other thing about this is I perceive it as language. So I'm interpreting, I'm speaking market. It's a way to visualize this. Yeah, you're welcome, Balian. So let's look. Too low. There's your buyer. Here's your test. Now this is microstructure. I'm not recommending anybody manage their trade, but you might, if you vet it, stay one level behind. And I'm not recommending it because if you tuck up too close, you might just get taken out on a counter rotation and we keep going marching. There's no way to know. So you need to vet that. And these are conversations that take place in the Trader Lab, you see. So, too low, buyer, this is too low, break high, too low, break high, too low, there's your structure, break high, looking good, Lewis. Here, break high. Oh, we can't wait, it's looking great. No, break low. Hey, come on up. What happens? In the microstructure, too high. Break low. It has to clear this volume. Now, if you're trailing, you might be under here or under here. It's up to your plan, right? And what happens? Hasta la vista, baby. You're out. Watch. Now, what do? We have a stat. You'll like this. At 9:30 Central Time, my time, and it's not quite there yet. This is the first hour high. It's called remember I said, I know you guys are listening. There's about a 98% probability we'll take out either the first hour high or low. And it's like, there's the IB. And I have a target above. Maybe we should try to get long because it certainly seems, and it doesn't have to, that this, just like this, was a high probability target, that maybe that's a good target. Let's get long for the target. So let's see. Now remember, where's our obstacle? It was here, right? This volume, right there. So let me show you this. Now remember I said I was going to show you something, and not all of them are there's structured trades and there's near miss structured trades. This is the area for potential long here and here for a long. You're outside of yesterday's range. Let's put the pieces together. This is retail. This is the VWAP. This is the mid. Now, it has a little more risk to it, subject to your plan, and I'm not recommending anybody do anything. You know that. But this is the area. There's going to be stops under here, VWAP, and mid. So to me, this has more risk. But so let's watch it, okay? Let's just read the structure. This might not be your trade, and I'm just going to leave it at that. Let's look at the fractals, though. So this is the area right here, actually, for the structured trade. But this is the behavior. Let's watch it. Microstructure. Here, let's get this thing going. You notice how this is out. This is algorithmic behavior, this stuff. So they're pulling. So, what's going on here? Reversal up. Micro high volume. Don't know. Volume again. This is too low. Don't know. Buyer again. What happens here? Liquidity comes into the book. Order flow. What are these guys doing? They're pulling up. What does that suggest? Now, this is all algorithmic, okay? What is happening here? They're adding. This is a potential long. Now, let's come back. Where was it too high? Here. was too high. So this would be an area to consider a scale there. What was too high? Area to consider a scale. Are you seeing how the structure might work for you? Now, there's nothing, everything is completely random in all of this. Here, let's look at this. So we know about this one, right? So this is an obstacle. Why? There's your seller. This was too high. Check. Maybe we're going to fall out. Do we know? Nope. But what do I know? 9:30 Central Time, IB stat 98 or whatever percent probability is, which is right there. So why wouldn't I be trading towards this? I have to tell you, I am, I was, and always will. Is everybody tracking? Now, this was the next target, and that was, these longs. I'm going to pause. Do you have questions? Yeah, Sorensen's posting about where should your stop be. That is a statistical answer. Um, I use structure. However, I also look at outside edges because if, like, for example, and like this thing, look at this. This is like in the middle of nowhere, right? How about maybe it's not in the middle of nowhere? Here, let me show you this. This is just to make you nutty because you're going to now join me in the nutty world because you're going to see behavior at the moment. So I'm going back, okay? Right here, let me explain what you have here. This is a distribution, right? You've seen this. We've talked about it. This is the fair price in this. Balian, this is for you too. So this is the outside edge, which is created by that. The outside edge is created by this. This is the boundary. It's a consolidation, right? This is rotational. Now, when it pulls out here, this was, or it could be, a long mean reversion, which comes back to the mean. Actually, the mean, yeah, right, comes back to here. So that's where all this came from. Then, so that's your outside edge, and now you're in a rotational trade. You see this, and this is too high. Now, when you break out of it, this leaves what's called low volume node. And what's the volume? What creates low volume is there's no chop. The chop is a consolidation in an auction. When you rip through something, it didn't have a chance to check. It leaves this behind. It's the same as this outside edge, and it's the same thing I shared with you this morning in the ETH, which was an outside edge. This is the bottom outside edge. This is the top outside edge. When I blow through it, I'm basically saying this might, underline, be too low, and now I'm starting a new distribution. This becomes the outside edge. So if I come back to it, potentially, or I come back to this one, I can be a buyer. If I come back to the high volume area, I can be a buyer also. This behavior here is the same as a Vpoc. When I talk about Vpoc migration, now I'm going into fractals. High volume is high volume. Doesn't matter. So I'm using high volume as a price. It's either too high, too low, if I come back to it from another location, or fair. So the idea is try to buy it when it's too low, try to scale at retail, and maybe sell it against what was too high or scale. And in this configuration, because I have a probability over 97% to take out either the first hour high or low, you might understand now why I'm getting long, long, long for this target. And here's the other part the point I want to make is what happens here. This is the IB high. It's not 930 yet, and I have over a 98% probability. Watch. This is why the Trader Lab is built on the business of trading, which is statistically based. If I have a 98% probability of taking this out, if I get if I pull outside to the, oh, it's on sale price, and this is retail with a 98% probability of this, can you see how I'm putting a trade together? This is a structured trade in the Trader Lab. Now, whether or not it's in your plan, that's up to you. And what I always suggest is you take it piece by piece, one structured trade at a time, and you got to vet them. Because this could just as well come here and it could do the Acapulco cliff dive and you take a stop. That's no different than the dealer dealing somebody a royal flush. You know what I mean? It's no different. Outside, and where was it too high? Here. Scale. Hold, target, and then helmet. And look what it does. You guys tracking. I think I have to stop here for a little while. And we'll continue. Are you guys with me? You got any questions? I hope you're getting something out of this. You know, I never know if you guys can do something with this. But in the Trader Lab, this is what the Trader Lab is based on. It's a community of traders sharing their experience, posting their charts and their mock-ups and, you know, all this kind of stuff. So everybody can benefit. And there's not a, you know, the other part about this is there's no one way or right way to trade. There's only metrics. Now, I'm going to show you something else here. Now, we have a couple things in the Trader Lab. We have something called the IB failure. This is a structured trade. So this is a target coming up. And again, remember, clueless, right? And wasn't there there's resting liquidity here. So that's a possibility. And there's also this target up above, a possibility. And remember, the market could care less about anything that we think. How do you know this is going to be the high of the day? How about no clue? Why? It's not my job. You know, it's like, you ever seen those signs, fortune teller? You know, and I'm not a fortune teller. And I gave up a long time ago. And I thought as a trader, I was supposed to be predicting things. But I found out, and it took a while, slow learner, that I can't predict anything. What I can do is recognize behavior and then try to adjust what I do based on the behavior. In a Trader Lab, we have a trade. And now it's not qualified in this condition, but it can be used a couple different ways. Let me explain. One, this is called the IB failure. It's an actual structured trade. You can download, there's 60 PDFs. You can look at these things and think about them. This is called the IB failure, and it's a mean reversion trade. It's a short. Now, in this context, it is not a short. It is what it is, the context gives you the indication once you're under this distribution, remember? Too high, too low, retail. Remember the Globex ETH was a low volume node. Remember, if it comes outside, it's an outside edge. This is an outside edge here. This is the initial balance. That was our 98% probability coming up. Again, past performance, not indicative future results. No way to know. Why not go here, right? When you think that would be reasonable? Well, life in the fast lane. Who knows? You break under here, it sets up the IBF. Two ways to use the IBF. One is a short, subject to your plan, or step aside and let all the longs get flushed out and let it come outside for a return to the IB. That's two ways to use it. For me, and again, you have to vet this for yourself, it's not a short, it is a opportunity to get long to come back here. And then whatever it does, it does. So let's see. Let's watch. Now you're going to see some interesting stuff. What was this? This was our last long or buyer. Okay, this was our last. So Watch. Here, this was a buyer. There you see him. Here's the test, okay? Buyer, resistance against this structure. You can see the symmetry, right? And no clue. If this is too high, they dive. I get my buyer. Okay, looking good, Lewis. And I got my stat. All right, looking good. Hold here. Come on. Hold here. Come on. Break below here. Oh no. Trade's over. Long's over. And if you add it here at this outside edge, you would take a stop. That's life in the fast lane. It's no different than the casinos have overhead and cost of production. We take stops. Same difference. So here's what happens. Too high. You don't know until hindsight. Too high. Seller. Oh my goodness. Now what do you want to do? Well, this is going to have stops above it. It's an outside edge. Where's my edge on the other side? Let's watch. I'm going to show you some interesting stuff. So, too high, too high, too high. This. Okay. Seller, pullback. Where do I pull back? So this is too high. This now is too high. And I don't know. This high volume is too high, which is created by this. All this now, because you can see the seller. We rejected all this support. So this is all too high. Now for me, I can't take a short. What I can do is take a long. Watch. VWAP right here is a potential long. Let me show it to you. And where do I have to clear? This 72. That. And why would this be? Because this is where the volume was, where my seller showed up. So I know this volume here is my resistance. So if I get a triggering structure and I'm looking for VWAP, I'm looking for this area. But what happens? This is always the mystery and the magic. And the stomach lining gets eaten a little bit. I see my seller. And what did I show you earlier about stops? 42 stops coming out, coming to a location 6, and I see an iceberg. I see the liquidity coming up in the book. I have my liquidity coming down. What do I want to see? I want to see behavior. Here's my volume. Here's my buyer. And it's like, that's exactly what goes on in my brain. It's a long, and now here's where you got to go. Here to get scaled ahead of this. It has to clear this, and ultimately this is my target. Here's your test. Let's watch. Where does it go? 72. See? Can you see why? 72 was ahead of 72, actually. So it tests 72. Now let's watch what it does. Comes back to the VWAP. What do we get at the VWAP? Buyer, test, microstructure, outside edge. It's the same trade. Buyer. So your volume is here. So you have micro, volume, buyer. Check. You're in a microstructure with a tweezer and an electron microscope. You might not be able to activate, but it's a suspect. Volume, buyer. Remember where it was too low? Here. It holds it, buyer. And where do I got to scale? Where's that 72? Where was it too high? It was this, right? And here, here, here. Gotta scale. There's my volume. There's my scale. Let's watch. Where does it come? Volume, buyer. Where am I trying to go? Let's go back and remember. Here, here. Let's see. Don't know. Where do we come? Outside edge. What was that? It was too high, remember? So right here, we got to clear this to get to that. It's the same as getting long at an outside edge to get to the high volume. If we only get out here, and we don't know, I'm looking for this. But I also know I had to clear this, the 72, right? 71. I have to clear this to get to this to get to that. That's what I know. What will it do? I don't know. No idea. Back to the volume. Back here. Buyer. What do I got to clear? Does this look familiar? This. So if you're trading this, and I'm not recommending anybody do any of this, I'm just showing you market mechanics. You can develop a plan if you understand and you do the work. Because what I'm doing here is this is language. So if think of a musical instrument or a foreign language. All I'm doing is interpreting the language of the participants. Can you speak market? And the difference between what I do and what indicators are, you're just using an indicator to be a translator. The difference is I can do this in multiple time frames without using fixed time indicators that are lagging. So I can do this right here or right there. I know what that is. What's my indicator going to tell me here? Is it going to tell me to get short or is it going to be telling me to get long? I don't know what it's going to tell me. Is it going to tell me that this is important or is it just going to cross over? And I don't know what it's going to, because I haven't used them in so long. I can't put it this way. I haven't used them in a long, long, long time. This is what I know. I got to clear that. You can see the volume. This is what creates an auction. It was too high, seller. Now what's too low? It was there. What's too high? It is there. So I got to clear this to go up to the next level. Where do I come? Vpoc. This is a structured trade in the Trader Lab. Let's look at it. So it's level trading is what it is. This is retail. Is it too low? And now what did I finally do? I took the stops at the VWAP. I took the stops at the mid. 500 stops come out. Thanks for playing. Again, gift basket. You see these guys buying into the stops. Okay, that's what you might see. Now, this is a location. And by the way, when it's doing this, I have no clue. I wish I did. I don't. Why wouldn't it just keep going? You ask. And I'm going to say, I have no idea because I can't know. What I know is what this means. And remember, levels are not walls, they're areas of behavior. So it comes down here. If this is retail, it's the same as the shoppers in the microstructure. That's too high. I'm not paying that. What about here? I'm not paying that. Same, you see. What about here? I'm not paying that. This looks pretty good. Nope. Nope. Uh, wait. Change. Is that too low? I don't know. What about here? Nope. Too low. Long against here. Where was it too high? Follow. Well, it was too high here, right? That's where your sellers were activated. It was too high here, and it's too high there. Let's just watch. Too high there. Where do we come back? Back here. Is this too low? No way to know, by the way. It looks like it's going to fall on its butt, doesn't it? Well, I know that was too low, and I know this is too low. And right here, I see this, and I'm looking for the long. I get that, and I'm going, I don't know. There, bingo. If it fits your plan, it's a long. Where's your resistance? Let's look. Here, and then there, right? Watch. Remember, I'm trying to get to the IB, wherever the heck that, here it is. See, I'm trying to get here. So that's is the trade. Now, look how many shots. This is trading, you know. And I have to tell you, this is just what it is. If it was up to me, I'd put one trade on and go to breakfast. But I don't control that. I only control what I do. And anyway, I hope you're getting something out of this. And I apologize for the length of time, that this has taken. Oh, look at this. So we're going for this, right? That's your target ahead of there. So that's your target. And then maybe continuation. Don't know. Break, check. too high. Where do we come? Variable high volume node. This is a Trader Lab structured trade. Buyer, pullback, back to here. And I haven't seen any of this, but these are structured trades. And where does it come? See, all of this is structure. So this is a long. There's your buyer. Here's your test. This is a VHVN, right? You've seen this all day today. This is your scale. It's coming back to check. And this was too high. The last place the sellers were activated. This is your next target here. Seller, and no clue, by the way. I mean, why not, right? Boom, too high. Any final questions? I've got about 5 minutes-ish left, and I thank you for your patience. This is what we do in the Trader Lab. Guys, it's really about understanding market mechanics and attempting to stay in alignment, accepting it's random, clueless, not your job to know. Relieve yourself of the wear and tear on your psyche of being able to predict. How about knowing you don't know? The only thing you can know for sure is a probability of one thing happening over the other. And you have to take one structured trade at a time, or setup as you think of them, and reverse engineer them. And know that this isn't based on the last trade or the last 5 trades. It's based on the last 30 to 50 trades is the only way you can determine if what you do has an edge or is just random behavior that has a negative expectancy. We've all done it where you see a big rotation, you put your favorite indicator or group of indicators on it, you look back 2 months, 6 weeks, whatever it is, and you see how many times it would have worked. How about that's what the gamblers do? They play their cards the same way, but they don't have an edge. They do walk out with dollars. How many times have you had a profitable run and then you end up giving it all back and losing it? Is that any different than what a gambler does? Get ahead, give it back. Get ahead, give it back, lose their stake, they're done. And you get the coupon to the buffet. It's no different in our business. Are you getting the coupon to the buffet? Are you sitting on the gambler's side? If you're waking up with Trader Groundhog Day, which means really that you're doing derivatives of a process that might have a negative expectancy, then you might want to think about it and put that effort into doing something different. Remember what Einstein said, what's the definition of insanity? It's just doing the same thing over and over again. I have to tell you, I was insane for many years. And trading will do some other things to you. That's another conversation. But the fact is, you need to gain something because you are going to class. You are taking a course or a class every day in trading. The key becomes, can you learn? Or are you going to keep paying tuition to repeat the class? At some point, you need to acknowledge it might not be your intent. It might be your process. And it might be an unrealistic expectation of what trading really is. The Trader Lab is built on an understanding of market mechanics, how the market works, why it does what it does, and at times we can get in alignment with it with structured, vetted trade plans that over time can give us a statistical edge. And it's about building the business of trading. The business of trading is knowing when you step up in the morning, what is the potential? And then when you see it because it shows up, your job is to put the trade on. Your confidence is derived from having statistics that tell you have X% of probability to get risk neutral before taking a full stop. That you have a probability with a certain trade management process to make an X amount of dollars over time. You are going to take stops. You're going to get blown out. You're going to, all the things that happen to everyone else, you're not special. It happens to all of us. But casinos don't change the game because somebody walks out with a suitcase won $100,000 in cash. They keep playing the game the same way because they know losses, as well as the buffet coupon, the cocktails, comping the shows, flying high rollers in, comping hotel rooms is just overhead and cost of production. And they still net dollars out. Why? Because they have the discipline to only play games, and in our world, setups that have an edge. If you're interested in that, I invite you to visit the Trader Lab. It's a community of like minded traders that come together to share their experiences. They're very diverse, post screenshots, share ideas. And if you have ideas or you have questions, this is what the Trader Lab is about. And these are some of the PDFs you can download. And these were done many years ago. Um, I'm not a vendor, it's not a course. The Bookmap Discord Trader Lab is open to everyone. You don't have to be a Bookmap subscriber, you won't be solicited. And there's a lot of additional education: stocks, options, crypto, uh, market maker behavior, algorithmic behavior, and of course order flow to the max with a high tier tool like Bookmap. The more resources you can cobble together, the more understanding you get, and the more you can differentiate yourself from other retail traders who are doing primarily the same thing you probably are doing now. Maybe you can actually make this into a long-term business. And while I have to say past performance is not indicative of future results, I think you might be able to make some progress on your journey. And I invite you to visit the Trader Lab. I hope you're getting something out of this. This, by the way, is the hierarchy. This is the trading process that I share in the Trader Lab. It's really, how does the market work? That's what this is based on. It's not based on your indicators. It's based on the participant behavior. The volume profile is just a tool that lets us look inside price and volume, because ultimately it is shopping in all fractals and time frames. You guys think of time, I don't, because the behavior of the participants is not governed by the clock. It is governed by their price discovery process. The context. What is our context? Well, it's up, and now it changes from directional to rotational. It can also reverse and get directional the other way and then get rotational coming back down. It can do anything, you see. So what our goal is to attempt to stay in alignment and define it. So it's a conditional statements. When I built trading systems, when I wrote code, and this is in the Stone Age, um, it was if this, then that. If not, then what? And a conditional statement is like a branch of branch logic. So if it does this, then that. If it doesn't, then what? If we have that microstructure, that chop, 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 and I break out to the upside and test it. So if this and it holds, then that, it tests. If it holds, then what? Then north. If I get that chop, 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 it breaks high, I pull back to the volume and break low. So if this, then that, I pull back and I go north. If not, then what? I fall below. I check it from the other side. It might be a short or get out of Dodge. That's conditional statements. So that's part of the process in building out setups and then vetting them and seeing how they behave. And now, obviously, there's more to it, but I have to tell you, most of us make trading complex, and we think it's complex, and we actually come into this business with a belief that it's so complex that we're going to find it's the right mix of time frames and quote indicators and whatever else, and chat rooms and special levels and this and that, and we make it very complicated. And somehow that in the complexity we'll ferret out what others don't see. And I want to suggest to you guys that if you're in the retail space, anything you've ever imagined has already been thought of by people who are a lot smarter than all of us. We are competing against quants, PhD mathematicians, physicists, and these are the guys that are in there working for hedge funds and the rest of it. We can't compete against those. We can't compete against the algos or the HFTs. We have to know where we are, and we in the financial food chain, and we have to differentiate our behavior from what our primary competitors are, which are other retail traders. And at times, we get to ride on the back of the higher time frame participants. It's like being a flea on the butt of an elephant. Really. So if you build out a process, when the outsized configurations or moves come, you will already be positioned. And then the volatility and rotations expand. But the primary process of participating is generic. Remember, it's fractal. So whether you have a 4-point move or a 3-point move or a 30-point move, if you come to the Trader Lab, you'll see my streams that are in the library, some of them 4 hours long of real-time narration. The process is the same. Once you understand market mechanics, you have the potential, at least, to develop a business, and then your job is to show up every day, manage your emotional state, and lean on statistics that you've vetted, because having statistics gives you more control over managing your fear, your emotions, your FOMO. You'll know, just like the casino does, that even though they lose, that over time that the probabilities will play out as long as they don't change the game or make it up. And that's what we need to do as traders. Be consistent. If we have a vetted edge, one setup, one structured trade at a time, and you can execute and you've done the work over time, just like the casinos, your edge will show up and you have the potential to have a career as a trader. I hope you got something out of the day. If you're in YouTube, please give a thumb up. There's a link in the bottom of YouTube. If you're interested in visiting the Trader Lab, say hi, take advantage of all the resources, join a great community. It's really great. And if you're in the Trader Lab, this stream is available over the weekend, and it's exclusive to Bookmap Discord Trader Lab participants to have these streams available for review. Thanks again. Please give a thumb up and subscribe to the channel if you want to receive notifications for other streaming. There's a lot going on in Bookmap, in the Discord Trader Lab, and in the general chat. A lot of free information, a lot of education, and I think you might benefit in your journey. Thanks again for visiting, guys, and I will look forward to seeing you next week.